Hello, I'm Alice Antonelli, a Director of Advisory Services at Nonprofit Finance Fund. In this video, we will briefly highlight a FASB accounting update on revenue recognition that will most likely affect you and all other not-for-profit organizations. We'll talk briefly about what is happening regarding revenue recognition so that you have a clearer picture of what to expect. We are going to take this step by step, and we're going to use this flow chart as our guide. First, we are going to figure out whether a grant or contract is an exchange transaction or contribution. Next, if we have determined that we have a contribution, then we must decide whether it's conditional or unconditional. Lastly, once we have determined that our contribution is unconditional, then we can make a determination of restriction level. First, we need to establish the difference between an exchange transaction and a contribution. This is important because the answer will determine the timing of when revenue can be recognized. An exchange transaction is a reciprocal transfer between two parties. It's also an exchange of equal value. That is, funds are given in exchange for receipt of specific benefits. Generally, this means that the transaction should be recognized as revenue when the nonprofit fulfills its obligation. Under current practice, many nonprofits actually treat government grants and other contracts as exchange transactions. But with this update, FASB is encouraging us to actually examine the content of the underlying grant or contract. In addition, this update makes it clear that the benefit received by general public does not fall under an exchange transaction. That is, the funder does not receive a direct benefit. Now let's look at contributions. A contribution received by a not-for-profit is a voluntary transfer of assets or funds. The intent of the donation is not reciprocal, meaning the donor does not receive any economic benefit. I will need to clarify that last point. Revenue is typically recognized when the grant is received or notified. There are exceptions, and we're going to get to them in a bit. So let's look at an example. We will use a fictitious not-for-profit called Help for Homeless Youth to illustrate this first point. Help for Homeless Youth just received notification of a grant from the federal government to do some research on homeless youth. The agreement requires them to submit a summary of the research findings to that agency. However, Help for Homeless Youth will retain the rights to the findings. Any unused funds will be forfeited or given back to the agency. So, is this transaction an exchange or contribution? Well, it's not reciprocal, it's not an exchange, and therefore it's a contribution. So why is that? Well, commensurate or equal value is not being exchanged. This is the key. Help for Homeless Youth retains the rights to and receives the primary benefit of the findings. The funder does not. The government agency may receive a benefit as the findings may benefit the general public, but it is not a direct benefit to that agency. So this is philanthropic. There is no expectation of benefit or value on the part of the agency. So, what if the government retains the rights to the findings? Let's say Help for Homeless Youth does the research but gives over the findings to the agency. Then it would be an exchange of equal value or an exchange transaction, not a contribution. Equal value, money in exchange for the research report, is exchanged. So, for instance, the government may use the results of the study to change policy regarding homeless youth. Another way of looking at it is that the agency is outsourcing the research so that they can make a decision themselves. Okay, now on to step 2. Let's focus on contributions. Is the contribution considered conditional or unconditional? In order to determine whether a contribution is conditional, we want to determine whether the agreement includes a barrier to overcome, either a right of return of the contribution back to the funder, or a right of release from the funder's obligation to provide funds to the nonprofit. Meaning, if the conditions have not been met, the funder does not have to transfer the funds to the nonprofit. If we have both, revenue is recognized only after the nonprofit has overcome the barrier, meaning after the conditions have been met. If there are no conditions or barriers to overcome, or if they already have been met, then the revenue is unconditional, and revenue can be recognized immediately. Once the contribution has been deemed unconditional, either there are no conditions present or the nonprofit has satisfied the condition, the nonprofit organization would then consider whether the contribution includes donor-imposed restrictions or not. Let's walk through an example. Our friends at Help for Homeless Youth have received a $60,000 grant from a foundation to provide career training to homeless youth. The grant requires Help for Homeless Youth to provide training to at least 30 homeless youth during the next 6 months, with specific minimum targets that must be met each month. The funder will only give Help for Homeless Youth $10,000 each month if they meet their minimum target, let's say training 5 homeless youth per month. There's a right of release from the obligation in the agreement, meaning that the funder does not have to give the funds to Help for Homeless Youth if Help for Homeless Youth has not met their obligation of providing training to 5 youth per month. So is this grant conditional or unconditional? Well, it's conditional. The agreement requires a specific level of service, training 30 homeless youth in 6 months with monthly minimum targets of training 5 youth per month. It also contains a right of release from the obligation of providing the funds if the conditions are not met. In this example, both are met. What if our friends at Help for Homeless Youth receive a $100,000 grant from a foundation to be used in its after-school program? This grant award specifies how Help for Homeless Youth should use the grant dollars. So for instance, they could hire 5 tutors or maybe provide a summer camp for 8 weeks. However, the grant does not specify that it is a condition upon meeting any of the stipulations as long as the funds are used toward the after-school program. The grant does retain a right of return, but only if the funds are not used for the after-school program. So is it unconditional or conditional? It's unconditional. The grant does not include a barrier to overcome, like stipulating how many youth must be in attendance. It does specify how the money should be spent, but the agreement does not say entitlement to the funds is dependent on meeting any of those stipulations. Because these conditions were not required to be met, the agreement does not include a barrier to overcome, and so therefore it's unconditional. Revenue recognition, the final frontier. Let's wrap it up. First, if you determine that the grant or contract is an exchange transaction, then the revenue would be recognized when it's earned, not too dissimilar to a fee-for-service transaction. You provide a service, you get paid. Remember, one indicator of an exchange transaction is there is an exchange of equal value. Next, if your grant or contract is not an exchange transaction, say there is no exchange of commensurate value, then it's a contribution. So now we have to decide whether the contribution is conditional or unconditional. This will impact the timing of when you can recognize revenue. So a conditional contribution, as we have said, has barriers or conditions, which means that it's not considered revenue until the condition or conditions have been met. Only after a conditional contribution becomes unconditional, we can recognize revenue. If the contribution is unconditional from the start, it can be considered recognized as revenue immediately. Lastly, just by virtue of no conditions, the unconditional contribution will be recognized as revenue whether it is restricted or not. Again, if a contribution is unconditional or becomes unconditional and either comes with restrictions or not, the condition will be recognized as revenue at that point in time or immediately. So what does this mean for you? This update will give you clarity in terms of, number one, how to classify grants and contracts, first as exchange or contribution. Then, if it is a contribution, whether it's conditional or unconditional. Number two, a little bit more clarity on the timing of recognizing revenue. And lastly, FASB is hoping that this update will give you a little bit more help on how to tell your financial story more effectively. If you're interested in learning more, check out the Learn section on our website at nff.org or contact us at consulting@nff.org. Thanks so much for listening. Goodbye.